What's going on, my fellow stock market gamblers? I hope you're having a great day. I'm Matt, and in this video, I will be discussing 5 stocks that have excellent growth potential. I will be discussing why I like these companies and the specific levels I will be looking to buy at. If you're interested in this type of content, subscribe to the channel and don't forget to turn on your notifications so you don't miss any of the new videos. It would be greatly appreciated if you could hit the like button and leave a comment because it really helps with getting this video in front of other people. Alrighty then, let's dive into it. The first stock on this list is Microsoft. Microsoft is and has been a juggernaut of a company. You most likely know them from their staple products such as Windows, Microsoft Office, and their Xbox gaming console. These are all solid products, but the main reason Microsoft makes this list is because of their cloud computing platform, Azure. Microsoft has been heavily investing in cloud operations, which has been paying off because Azure continues to grow in popularity. Beyond that, there's a strong argument that cloud computing itself will continue to rapidly grow over the next couple decades. I personally think Microsoft is well positioned to ride the wave. On a scale of 1 to 5, with 1 being very bearish and 5 being very bullish, the average analyst rating is 4.52. Out of 36 analyst ratings, 32 are either bullish or very bullish. At the most recent close, Microsoft was trading just below $203. The average analyst price target is $215, but I personally think the stock could go even higher. With that being said, I wouldn't just randomly buy the stock. I would recommend creating a long position as close to support as possible. Here is the daily chart for Microsoft, whose ticker is MSFT. Since the start of the year, the stock has rallied an impressive 27%. At its low in mid-March, it was down 17%. Since that point, it has gained a ridiculous 53%. If you don't already own shares in Microsoft, you'll want to buy as close to support as possible, the first of which is at 193.48, which was the low from late June. If the bulls can't defend this support a second time, the next support would be just below 191. This level marks the previous high before the market took a serious hit, and it's common for previous resistance to turn into support. Not far below that is another support around 187. This has served as resistance multiple times in May and once in mid-February. I truly don't think this scenario will happen anytime soon, but I would love to own Microsoft at 175. Whether you already own Microsoft or you're able to get in at one of these support levels, I would look to take some of my profits off the table at the all-time high of 216. To have a better idea of what your price target should be above this all-time high, the chart first needs to develop in this region so we have a better idea of the supply and demand. The second stock on this list is Home Depot. Home Depot is the world's largest home improvement retailer. I personally think they have a fundamentally strong business and find them to be more attractive than their competitors, such as Lowe's, because they have such a strong online presence. In fact, Home Depot has such a strong e-commerce presence, the company saw a boost in overall sales during lockdown. The average analyst rating for Home Depot is 3.93. Out of 31 ratings, 19 are either bullish or very bullish. One is very bearish, but I'm assuming he just doesn't like to make money. The most recent closing stock price of $260 is actually above the average price target of $255. I do really like Home Depot as a company, but its stock is currently a little too expensive for my liking, which is why we need to break down the chart so we have a better idea of what levels to hop in at. Here's the daily chart for Home Depot, whose ticker is HD. Since the start of this year, the stock is up a solid 19%. At its low, it was down 36%. From that point, it has rebounded an incredible 85%. As you can see, it's very close to testing the all-time high of 261.32. I would never recommend buying at or near all-time highs. You should wait for the stock to revert to previous support levels. If the stock can't make it over this level and gets rejected, there's quite a bit of demand between 254 and 246. If the bears push the market below this region, the next support would be at 239. If the bulls can't hold this line, the next stop would be 234. If Home Depot is hit pretty hard, I would be excited to buy the stock at 228, which has served as support on 1, 2, 3 occasions. The third stock on this list is Take-Two Interactive. I'm a fan of this company and its stock because I think video games, and specifically esports, will do nothing but grow in popularity in the coming years. Take-Two owns the incredibly popular video game brands Rockstar and 2K. They are responsible for the games Red Dead Redemption, Borderlands, Grand Theft Auto, NBA 2K, and Civilization, just to name a few. The average analyst rating is 4.18, and out of 27 ratings, 15 are either bullish or very bullish. Take-Two is trading just above $150, and the average analyst price target is 152.5. I'm personally interested in investing in this company for the long haul because, as I said before, I think video games, and specifically esports, will do nothing but grow in popularity. From the start of 2020 until now, Take-Two, whose ticker is TTWO, is up over 23%. At its low, it was down 18%. And since then, it has climbed a nice 50%. The first buying opportunity would come at the first support of 144, which roughly aligns with this peak from late June. If the stock can't hold this level, I would then be watching 137. If things get more bearish, you could try again at 133, and if things get really bearish, you should be paying attention to 125. I know they seem far away, but I really do like these bottom two levels because they have both served as areas of consolidation and previous resistance points. If you're fortunate enough to buy Take-Two at any of these support levels, you should be taking some of your profits off at resistance. From the most recent close, the only notable resistance is 156, which is the recent all-time high. The fourth stock on this list is United Health Group. I know health insurance can seem, how do I put this, boring, but this stock can honestly serve as a keystone to your portfolio. United Health Group is a Goliath of a company, and I personally think owning a health insurance stock is a smart play because regardless of what's happening in the economy, people still get sick, get into accidents, and need health insurance. As long as there's no massive healthcare reform, UNH is a solid bet. The average analyst rating is 4.39, and out of 28 ratings, 23 are either bullish or very bullish. The most recent close was at $306, and the current average price target is just below $340. From the start of this year until now, UNH is up 5%. In mid-March, it was down 36%, and from that low, it has managed to rally 63%. As things currently sit, there is overhead resistance at 311 and 316. If the stock is rejected and retracts, I would be paying attention to the key psychological level and previous resistance of $300. If United Health Group continues to fall, I would then be watching 285, which has proven to be an area of high demand. Then if the healthcare sector really starts to decline, you could watch for a bounce off of 273, which has served as support on multiple occasions. It's now time I admit I don't have 5 stocks for you. I have 4 stocks and 1 ETF. The final thing on my list is ARKW. ARKW tracks a basket of stocks and is branded as a next-generation internet ETF. I'm specifically interested in this ETF because I think fields such as cloud computing, cybersecurity, e-commerce, big data, and artificial intelligence will do nothing but grow in the future. Not only is being on the forefront of technology exciting, I think it's a smart financial bet. Here are the top 10 holdings in ARKW. I'm sure you recognize most, if not all, of these companies. Here's the daily chart for this next generation internet ETF. As you can see, since mid-March, it's been on a journey straight to the moon. From the start of this year, it is currently up just over 63%. The low in March was a decline of 30%, and from then until now, it's up a blistering 131%. If you don't already own it, you should wait for a retraction to a previous support. The first would be at $89. If the tech sector takes a hit, the next support would be at $81, and a third support level would be at $75. For my personal trading style, this first support seems a little too high, and I would feel much more comfortable buying at one of these bottom 2 supports. If you already have a long position, or if you get in off a bounce, you should pay attention to these support levels because they can turn into resistance. From the most recent close, the only worthwhile resistance to point out is the previous high just below $101. If the bulls push the market above that, we would have to wait for the chart to develop in this untested territory to get a better understanding of the new resistance lines. From a more general perspective, Make sure you're buying into these markets as close to support as possible and selling at regions of resistance. Keep in mind, I'm not a financial advisor. Please do your own research because it's your money, not mine. Let me know in a comment below if you agree with this list, disagree with this list, or if you think there's an interesting stock I should look into. If you enjoyed the video, let me know by hitting the like button. If you enjoy this type of content, subscribe to the channel and don't forget to turn on your notifications. Thanks for watching, and as always, best of luck in the markets.